Hi everyone. We are very excited to be launching our Contra Fund NFO. Question is, what is Contra Investing? Contra Investing is investing in stocks which are unpopular at any point of time and hence they offer a good risk reward. It is avoiding momentum stocks which are doing very well at any point of time. It is avoiding going close to the index because we are trying to avoid both fair value stocks and overvalued stocks. So by definition, we are confined to a narrow set of stocks which we think will give good returns in 3 to 5 years. If I break contra investing into 4 categories, they are: one is turnaround plays, where there is a specific problem in the business of a company which we think is temporary and over next 2-3 years is likely to go away. The second is there are managements which have negative sentiment attached to them for some time, which again we feel over time will change. Third is macro turnaround, something like COVID where entire outdoor consumption stocks fell. That is the third category of contra investing. And fourth is a sector itself being under a lot of trouble. So for example, periodically we see that the asset quality of banks goes through cycles. And if we buy in a down cycle and sell in up cycle, we generally tend to make good returns. So these are the types of different categories of contra investing. Now the question is why we are launching this NFO of Contra Fund now. I think while generally there is uncertainty in the world at any point of time, it is true that we are living in a world where uncertainty is unusually high. And apart from many other things, there are 2 mega themes which are driving this uncertainty. One is, of course, artificial intelligence, which probably is the biggest technology change we will see in our lifetime. But there is clearly a lot of ambiguity about how soon will it affect our lives, what is the intensity with which it will affect our lives. The other big area of uncertainty is geopolitical. After 2-3 decades of relative peace, we have entered a phase where the 2 big superpowers, US and China, are locked in a relationship of friction. And what we are seeing is that this is playing out in multiple spots like Ukraine, Iran, etc. So given these 2 mega themes, what is likely to happen is we are likely to see a lot of volatility in the market. A lot of sectoral performance will show a lot of divergence, which has happened in the last 2-3 years. So we've seen that the sector price to earning multiples, for a lot of them they have re-rated, for a lot of them they have de-rated, and therefore these cycles give us a rich landscape for contra investing. Finally, now the question is, why Bandhan Contra Fund? At Bandhan, what we have tried to do over the last few years is to build a team which has experience, which covers a wide breadth of the market along with deep insight, and therefore overall, if you see, our equity performance has improved in the last 3 years. We intend to bring that same vigor of research, the intensity of good fund management. This fund will be aggressive in terms of stock picking. So what we call active share, which is basically how much is the fund different from the benchmark, is likely to be high for this fund. Also, the extent of exposure to small and mid cap is likely to be higher. So we feel that investors who are coming into this fund should have a bit of patience because contra fund by its very nature plays out over a period of time. We are avoiding momentum stocks. So investors should come with a bit of patient mindset for this fund. Also, as I said, this is a bit of a higher risk fund than a lot of other diversified fund because we are taking more deviation from the benchmark. We are going in for more aggressive stock picking. So this is something which investors should factor in.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.